The emergence of generative artificial intelligence has reshaped modern technology with extraordinary speed, and few companies have capitalized on this shift as effectively as Palantir Technologies. Long before this new wave of artificial intelligence captured global attention, Palantir had already earned a reputation as a premier provider of sophisticated data analysis for both government agencies and major enterprises. The company's reputation was built on years of work, helping organizations make sense of enormous unstructured information sources, a field in which it had become a trusted leader. Drawing on decades of experience with artificial intelligence systems and data interpretation, Palantir created its artificial intelligence platform, a system that quickly became the standard for organizations seeking reliable, real-time insights. This platform was designed to plug directly into existing business structures, reducing friction and eliminating the need for expensive replacements. Executives using the platform have been able to make real-time decisions, uncover inefficiencies, and improve their operations. Since the system arrived in April 2023, Palantir shares have soared more than 2,000%, turning the stock into an extraordinary compounder. As the artificial intelligence boom continued, a new debate began forming around whether the industry was overheating. Some investors claimed progress had slowed and insisted the entire field was approaching a breaking point. Investors searching for clarity just received a clear signal from Nvidia, the company powering much of the world's artificial intelligence hardware. Many analysts predicted Nvidia's growth would taper off, yet the exact opposite occurred. During its fiscal 2026 third quarter, which ended on October 26th, Nvidia produced $57 billion in revenue, climbing 62% year over year and 22% quarter over quarter. Adjusted earnings reached $1.30 per share, jumping 60%. Nvidia's gross margin of 73.4% added even more strength to its results. Analysts had expected roughly $55 billion in revenue and $1.26 per share, showing how significantly Nvidia beat expectations. A large portion of this growth came from Nvidia's data center business, which includes the powerful processors used by artificial intelligence developers, cloud platforms, and massive server systems. That division generated $51.2 billion in revenue, rising 66% year over year and 25% sequentially. These numbers help demonstrate the scale of demand for high-performance artificial intelligence hardware. Chief Executive Officer Jensen Huang explained what was fueling this wave of demand. He stated that Nvidia's Blackwell artificial intelligence chips were performing far beyond expectations, with cloud providers buying every available unit. He emphasized that the graphics processing units designed for artificial intelligence were completely sold out, meaning customers were absorbing supply as quickly as Nvidia could manufacture it. Even more striking is Nvidia's outlook for the fourth quarter. The company expects $65 billion in revenue, which would mark a 65% year-over-year growth, faster than the previous quarter's already enormous expansion. Nvidia also anticipates gross margins approaching 74.8% at the midpoint of its guidance. These expectations offer strong evidence that artificial intelligence development is not slowing down. The broader debate about artificial intelligence's future continues, with high-profile investors and technologists sharing conflicting views. Michael Burry, whose famous financial wager inspired the movie The Big Short, has argued that artificial intelligence is in a bubble and has backed this belief with a $1.1 billion position. Jensen Huang, on the other hand, insists the data tells a very different story. During Nvidia's earnings call, he addressed concerns directly, explaining that talk of an artificial intelligence bubble does not match what Nvidia is witnessing. He described three major shifts happening simultaneously. The first is the move from traditional central processing unit computing to graphics processing unit accelerated computing. The second is the rise of generative artificial intelligence, which is transforming existing applications while giving birth to entirely new capabilities. The third is the arrival of agentic and physical artificial intelligence systems, which represent a new era in computing altogether. Huang believes these shifts will require massive investment in computing infrastructure for years to come. All this activity in artificial intelligence hardware is excellent news for Nvidia, but it also sets the stage for Palantir to benefit. The purpose of increased spending on data centers and cloud systems is to give companies and governments the ability to use next-generation artificial intelligence systems effectively. Nvidia dominates the graphics processing unit market, but Palantir remains unmatched in its ability to unify scattered data, draw insights from massive information sources, and help organizations use artificial intelligence in practical, measurable ways. Palantir's artificial intelligence platform is central to this transformation because it allows leadership teams to act immediately on information that once would have required days or weeks to process. Palantir's recent quarterly results show the strength of that demand. demand. Third quarter revenue rose 63% year over year and 18% quarter over quarter, reaching $1.18 billion. Adjusted earnings per share rose to 21 cents, increasing 110%. More importantly, total contract value climbed to a record $2.8 billion, rising 151%. This metric gives investors a sense of how much future business has been secured, but not yet recognized in revenue, making it one of the most important indicators of long-term performance. However, even these strong results do not fully reveal the explosive growth within the United States commercial division, which includes the artificial intelligence platform. Revenue for that division increased 121% year over year and 29% sequentially, reaching $397 million. Customer count rose 65%, demonstrating how quickly demand for the platform is accelerating. The division's contract value reached $1.3 billion, growing 342%. This expansion also pushed Palantir's remaining performance obligation to $2.6 billion, a climb of 65%. One of the biggest obstacles standing in the way of most businesses is the challenge of implementing advanced artificial intelligence systems while still earning strong returns on investment. Palantir's most recent shareholder communication included numerous stories from customers showing how the company is solving this challenge. These stories highlighted organizations using Palantir's technology to accelerate production timelines, reduce operational waste, and respond rapidly to changes in their environment. Jensen Huang even stated that the Palantir ontology may be the most important enterprise technology stack in the world, an extraordinary endorsement from a leader whose company supplies the hardware behind today's artificial intelligence revolution. Valuation is an important consideration for any long-term investor. Palantir currently trades at 159 times its expected earnings for the coming year and 61 times next year's estimated revenue. These high valuations mean investors are paying a premium for the company's growth. Despite these elevated numbers, Chief Executive Officer Alex Karp reaffirmed plans earlier this year to expand Palantir's revenue by a factor of 10 in the coming years. If Palantir maintains its current pace of expansion, this target may be possible within the next decade. Palantir will not be the best fit for every investor. Some may prefer to begin with a small stake purchased during periods of weakness, while others may choose to build a position gradually through a long-term strategy such as dollar-cost averaging. Both approaches allow investors to manage volatility while still gaining exposure to the company's long-term potential. The truth is that Palantir represents a high-risk but high-reward opportunity. The company is positioned at the center of one of the most significant technology revolutions of the modern era. If artificial intelligence continues to expand and Palantir maintains its leadership in data integration and decision-making systems, the stock could be worth far more in 10 years than it is today. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.